Good morning, everybody. Welcome to the Morning Cuppa 8 on a Wednesday. I'm here to present the Midweek Futures Traders Technical Brief, and we are on week 4, August 2025. This table has become more interesting as we progress over the weeks. As noticed on the last column, we have seen many of the products that we are covering has maintained a very bullish stance and remaining on a positive setup. This is referring to especially the US indices, especially the S&P 500 and the Dow Jones Index. So for even our own FKLI, we have also seen that it has moved from a neutral to a positive setup, although there was a bit of a correction that was seen, but because of that spike that we noticed during the week before, the trend is still basically on an upside momentum. And we also saw Hang Seng and the China A50 index too, gaining momentum and sustaining the upside orientation. This is very positive in terms of chart movement. We also saw some movement in the agri segment. We saw corn and soybean oil, especially turning from negative to positive in just a week. So the performance is not noticeably a move which we would want to focus on. And basically, we would like to see a small correction before more upside for the agri segment. Today, we will also look into metals. Metals from neutral positions have also gained ground and turned positive with their setups. And we now go to the FCPO. FCPO has seen very good upside momentum, but there has been a hiccup during the week, and there has been some consolidation due to high prices. And on Monday, basically the elevated prices was one talking point whereby it could actually affect future demand. Exports of Malaysian palm oil products for first to 25 days climbed 10.9% to 16.4% from the previous month, according to MSPEC, while ITS climbed 10.89% from the previous month. So indeed, we saw improvements in the export side of things, and this could maybe hold palm for a while, although currently the orientation is slightly on the bearish side. And we turn to the US indices. S&P 500 registered an increase of 10,000 short positions. Again, this is reflecting the high prices whereby investors or fund managers have been hedging those positions when prices are on the high end. The Nasdaq and Dow Jones was almost unchanged, with the former still in net shorts and the latter being in net long. So coming to the micro S&P 500, which is the product we will focus on. Basically, US stocks has remained high as investors overlook the back and forth surrounding the Trump administration and Federal Reserve Governor Cook. Despite of this uncertainty, markets focus on the shorter term and view the central bank as highly likely to cut rates at its September meeting, pricing in nearly 90% chance for the cut of at least 25 basis points. So as noticed from the chart here, there has been a small correction. And due to the fact that the volatility is very low, we look at a trade in the S&P 500. This is December contract, whereby both existing profile and short-term chart setup is also on the positive. Current price is at 6542. The reference price we're looking at is 6518, which will give us a potential profit price of 6560 and giving us a value of $210 and potential loss of below 6502. And that would be a potential loss of value at $80. Moving on to metals. Generally, metals positions are relatively flat in terms of its movement. This is an indication that sentiment is on the neutral side. I think from the first table which I showed just now, we saw that the second and third week, whereby we saw mostly metals are trading in a more neutral stance than the rest of the markets. But coming on to this week, there has been a slight movement in gold prices. From the consolidation level, we have noticed that now it has perked up a bit from the downside, and prices are gaining some momentum as the days go by. So basically, what has actually moved gold prices is basically, again, it's the move by President Donald Trump to fire this coup, which prompting a sell-off in the US dollar and also renewed demand for safe haven assets like gold. So prices have normalized, but the broader base for gold support is remain as well. So I think gold is something I want to look at. And for this, we look at the micro gold December contract. The current price is at 3441. The reference price is 3427, which means possibly there is a slight correction before the reference price would be touched, and that would give us a profit of 3471 value at USD 440, and a potential loss of below 3413 USD 140. So the price to loss ratio here is pretty impressive. So I will say that this is a good what I call observation, and to take note of it. So that's all I have for this morning. I will pass on to the next speaker. Over to you, Joseph.
All right. Morning, everyone. Thank you, Vincent, for the weekly technical setup updates. So let's take a look at the Hang Seng. Right. Yes, actually pulled back from the 26,000 point resistance, as I think everyone aware that yesterday was the MSCI rebalancing day, right? And this MSCI rebalancing affect the market that they track from Taiwan all the way to the Europe, right? Majority are targeting the fund managers that invest in the overseas market. So you can see that yesterday, right, Hang Seng do have corrections, as well as Malaysia as well. And looking at the Hang Seng, right, 26,000 point is the immediate resistance. But on the downside, a very strong support has formed at this 23,800 point level. And meanwhile, right, for the past 2 months, the Hang Seng has been charting a higher high, and also right now it's actually consolidating sideways over here. I think the sentiment would be better, right, after we go into the month of September, right? Of course, this week, right, regional market is going to close for the month of August, and we shall see a monthly candlestick, right, when the month of August, this Friday, the sessions are closed. And as of the Hong Kong watch list right now, we are still looking at these counters, and I've highlighted some of the counters that I think potentials, but those I have not highlighted also have a potentials stocks that attract funds. Majority of them are the index stocks, either Hang Seng Index or the Hang Seng Tech Index, right? And so this morning I'll be looking at two counters. Firstly, the travel related counters are Tongcheng Travel 780, which they have just announced their semi-annual results, and post the result announcement, the share price have reacted positively. And yesterday, right, Tongcheng have break past the 21 Hong Kong dollar 50 cents. So the breakout, it may test 23 and followed by 25. Downside support 20. Secondly, Zhaojing also post results. Shares have break past the 22 Hong Kong dollar and heading towards 24 and followed by 26. Downside is 20. So you can heard what Vincent have said. Sentiment right now become bullish on the gold price as the gold have starts to moving on the upside again recently. So hopefully that will boost more confidence on the Zhaojing mining, which right now you can see that the momentum is strong. Now, after the Powell have mentioned last week, he is going to cut interest rates. As what we have heard, the Trump have launched a new attack on the Fed officials. This time is the Cook, which if the official being replaced, right now there are 7 voters on the Fed decisions. Once she's being replaced, and then on Trump may have 4 officials that leans towards his policy, and that will give him a very strong advantage. So we'll continue to develop the situations, but what we do see on the as of the sentiment of equities, right? The S&P 500 continue to move up yesterday and on track to record a new high this week, right? And so for the US counters, right, last week we do have a technical report on DoorDash, and you can see that the share price initially it break the resistance and pull back, and right now is testing the breakout point again with the downside support at 230. Now, secondly, we have a report on Lam Research last week, and as you can see, the share price have went up before the R1 and the pullback, and right now is climbed above the breakout point again. So all this price action shows that the sentiment remains positive, and looking at the price volume profile, very strong volume have formed around at 80 level, then on the second higher volume, which is somewhere around 100 US dollar. So in terms of price volume profile, I can see that this is a double peak, right? And right now the price have actually break this double top. So as long as the Lam Research stay above 95 support level, you should see more upside movement from Lam Research. Now, secondly, last week I also mentioned to you about this counter C Limited, which is a Chinese stock that lists in the US market. And similarly, post results, they have staged a very strong gap up, right? I think that in terms of trading psychology, right, once you see a stock gap up, it's very hard for retail investor to follow the share price. But in this example, we must learn that once results come out and then the stock reacted, what we need to do is to draw the support resistance to know in the event that shares reverse on the downside, what is the maximum losses or the downside risk that is going to incur. So in this example, you can see that the C Limited have a very strong volume or very high volume being transacted or formed at this 160 level. So this 160 will be a strong support level. So since the gap up, the share price did not pull back to the 160, instead keep on and moving higher and breaking on the R1, R2, and right now heading to the R3. So continue to follow our technical report, especially if you can, right? Try to learn to use this price volume profile that we have shared during our morning Cuppa. So for Malaysia market, right, yesterday we experienced a very strong selling pressure in FKLI, right? But so far we still stick to a bullish swing bias with support at 1535. And on the upside, the resistance at 1620 and 1650. And looking at the FKLI, I also want to mention that in the market, there's this seasonal effect, right? In the month of August, right, it tends to form a high, and then in the month of September, we likelihood going for corrections. But going down, right, in the month of October, November, especially in December month, right, market will be very bullish in the month of December. So what we have to do during this August and September is firstly to protect the profits. Secondly, right, once the market actually pull back, we go for a bottom fishing and to ride the trend again all the way until the December month. So yesterday, what happened is that the MSCI rebalancing, that was a quarterly rebalancing, and seldom we see the market have a very strong correction in the month of August. Usually happens in the month of April or the November, which is a semi-annual rebalancing. But yesterday, the quarterly ones, what we do see is a very strong selling pressure. But over here, I also want to mention that there are a lot of sellers yesterday. But if you look at the other coin, the other side of the coin, right, there are also a lot of buyers yesterday. In a nutshell, yesterday there were a lot of foreign selling, but you look on the flip side, there are a lot of local insti buying as well. So what I'm more interested is that 1 week later, which is somewhere in next week, September, especially this end of the week, we have the weekly closing, whether the FKLI will breach 1620. Once the FKLI breach 1620, which means yesterday buyer will be firmly in control, with the bulls in control, then on, it will be very likely FKLI will breach the 1650. So based on yesterday price actions, right, I'll be more interested to look at the support level 1535, whether the FKLI will have a rebound from a 1535. As of yesterday, the very strong buyer have actually accumulated the shares, whether they are going to continue to buy on the low, especially at support level 1535 and 1550. This is what I'm going to see on this week. All right, and so as for FCPO, we do have a mild corrections, and right now 4006 has become the interim resistance. On the downside, support is 4350 and 4250. We make no change on our stop loss level, which is the 4250. So for trading stocks, we have report on the Franken as well as their Edeltech. You can actually look at the technical report that we have published this morning. So I'll stop here and pass on to the stage to Iftaar on the Tahan report. Thank you.
Hi, thank you, Joseph. So we have the results review. We keep our neutral call with an unchanged TP of RM3.65. So first half results came in within expectations at 48% of our full year estimates. And Taan declared another 10-cent dividend in the second quarter, and this brings first half DPS to 20 cents, or a payout ratio of 92%. So in terms of its timber segment, second quarter timber still making losses, but it has narrowed down to less than 1 million from about 5 million in the first quarter. So log sales volume dropped 20% year-on-year in the first half, while its ASP offset the drop in sales volume, marking a 9% increase year-on-year. However, for plywood, we saw both declines in volumes as well as ASP. However, management noted that for plywood, the sales volume have recovered in the third quarter, and we can already see the effect in the second quarter where sales volume increased 69% Q-on-Q. So we maintain our assumptions for the timber segment as of now. We are still expecting the segment to break even in F25. So for its plantation unit, first half FFB rose 3% year-on-year, and this brings CPO sales volume to plus 11%, and this is also on the back of higher external FFB purchases. So this also led to unit costs in the first half to be lower 9% year-on-year. However, Taan is still guiding for costs to be flattish year-on-year for FY25. And this is because of the higher fertilizer prices of plus 20% year-on-year in the second half. So overall, we make no changes to our earnings as we have taken these factors into account. So Taan is now trading at 10 times FY26 PE within its peer range of 6 to 11 times. The dividend yield is also quite attractive at 8% of FY26. So I'll stop here and I'll pass on to the next speaker. Thank you.
Yep, thanks, Iftaar. Morning, everyone. Nabil here. Today I've got MBSB's results review. This is a company that we initiated coverage on about 2 months back. Second quarter results for MBSB stood at just under 96 million ringgit, which brought the first half sum to about 180 million ringgit. This was up 35% year-on-year, but actually formed just 38% and 37% of our and consensus full year forecast. So despite that relatively low number, we do deem the results to be in line as we expect a acceleration in earnings come second half of the year in tandem with a pickup in financing growth. And this has been guided previously by management. In terms of the overall results, income growth was flat year-on-year due to softer net interest income, but was offset by stronger non-interest income. The former was largely due to a smaller financing base, while the latter was due to strong fee and also non-fee income. We saw credit costs ease to about 42 bips year-on-year from 70 bips the year before. This really on the absence of lumpy provision charges. And last but not least, a 2-cent dividend per share was declared, translating to a 91% payout ratio. Overall, we deem the results to have indicated some positive progress at management's balance sheet optimization plan. So even though financing growth was flat year to date, where there was growth was in the SME segment, where your yields are higher, and where there was more concentrated negative growth was in retail personal finance, which is a bit of a high risk kind of segment for MBSB. On the deposits front, deposits growth was also negative, but on the other side, retail deposits growth was a very strong 18% year-on-year. And so that we viewed that switch in composition on both the financing and also the funding side as being, in line with what management aims to do with respect to its balance sheet optimization. And we also gathered that this shift in composition may have helped to lift your net interest margins by about an estimated 4 basis points on a year-on-year basis. Elsewhere, the headline asset quality indicators remain subdued. The GIF ratio, the gross impaired financing ratio, and also the financing loss coverage ratio, these were both still trending at sub-industry kind of levels. And specifically, the financing loss coverage of 35% remains quite low to the naked eye, but I think management is comfortable with such levels as about 95% of its impaired financing are secured. And also a huge chunk of its impaired financing is from legacy cases. The CET1 ratio remains at industry high levels, about 19.5%, which is what enabled the very high dividend payout ratio and what should keep that 90% odd dividend payout ratio sustainable. Management is hosting its results briefing later today in about an hour's time. Until then, we make no changes to our earnings and target price. We keep neutral pending the results briefing today, but we suspect there might not be much changes after that. We do prefer banks that are larger and have more overseas exposure. This is really to weather through the expected domestic margin compression in the second half of the year. So that's all from me. We are neutral on MBSB with a 67-cent target price. So over to you, Colin. Thanks.
Okay, thanks, Nabil. Yeah, so moving on to UA development results. Second quarter numbers beat expectation. It was rather strong. The revenue was mainly driven by the existing projects. As you can see, earnings were boosted by the cost savings recognized from L'Oreal Residence, which was completed early this year. As a result, EBIT margin widened to 75% for the quarter from 53% in the previous quarter. Net cash is 1.91 billion, which is quite significant. Property sales eased to 148 million compared to 265 million in first quarter. And so of the total first half sales of 413 million, Bamboo Hills Residence contributed 267 million, followed by L'Oreal Residence 54 million, Esther Hill 42 million, and Dual Tower 40 million. The take-up rate for Bamboo Hills currently stands at 59%, as you know, Block C was just launched, and hence the blended average was brought down. Was just launched in April. Esther Hills take-up rate just improved slightly from 67 in the previous quarter to 69%. The highly anticipated project in JB will be launched once the company obtains the APDL. The project is very near to the RTS station, and the company plans to build a link bridge to connect to the transport terminal. We understand that UA has already started the preview for the project, and buyers' interest has been quite encouraging. The indicative ASP of 1,002-1,003 per square foot is very much in line with the current market rates for new high-rise projects in the vicinity. As the other one, UA Business Park Phase 2 office will be launched this year, but take note that this will be an investment property for the company, i.e., it will be rented out before any en-bloc sale. So our earnings forecast were raised by 14 to 15% in view of the very strong first half numbers and also the recurring income stream coming from rental and also hospitality, as well as the timing for the JB project launch, which may likely happen by end of the year. Unbuilt sales remain steady at 888 million, relatively unchanged from the previous quarter. Our target price is now raised to 2 ringgit 8 cents, based on 30% discount to RNAV from 35%, basically to reflect the positive earnings outlook ahead. And we maintain our buy rating on the stock. Okay, that's all from us today. Happy trading and hope to see you all again at our RHB Morning Cuppa 8. Thank you.